We're joined now by senior market analyst with stock market newsletter Markets Today, Henry Jennings. Hello, Henry.
Hi, Bridget. How are you?
Yeah, I'm good. Take us through the central banks in the US and why this is such a critical week.
Well, I guess it's a big week for central banks. The Federal Reserve meets. They kicked off their meeting on Tuesday. They will be finishing up on Wednesday. So Thursday, our time, we should get the pronouncement from the Fed that they have cut interest rates for the first time for some time by 25 basis points. There has been some speculation, of course, that they would cut it by 50 basis points, but that does feel a little bit panicky given what's happening in the US economy, because things are still going pretty well in the US economy. So although some of the data is coming in soft, we did see a GDP revision up to 3% recently. So things are going moderately well, I have to say, in the US economy. So 25 basis points should come through on Thursday, but that will also be accompanied by, I guess, more chat from Jerome Powell in terms of the pace and likely endpoint, I guess, of where interest rates will end up. So the cycle now of rate cuts is well and truly entrenched. We get the Bank of Japan on Friday as well, so it's going to be central banks very much to the fore this week. So it's going to be an interesting week for markets.
Yeah, absolutely. Let's come home because some new record highs for Aussie shares. What does this mean?
Well, I guess it means that there's some people out there that are going to be popping champagne corks, but it certainly looks as if we're going to get a record high today. We have tried in the last week or so to push through it again, but we've failed to close above it. But today it looks like we've got enough momentum, I suspect, and close enough to really hit those record highs. And what's been driving this, of course, has been the huge rise of Commonwealth Bank and the rest of the banking sector as well. There's a lot of hope. There's a lot of optimism built into this market rally at the moment, especially in financial services. There is even now talk that maybe the RBA would consider or maybe planning on maybe a rate cut towards the end of this year. Previously, there has been Michelle Bullock saying that there's really no rate cut on the horizon until 2025. But there are a few analysts now coming out and suggesting that maybe, just maybe, we might get a bit of relief in November. But I think that's a long shot. Fingers crossed for that one, Bridget. But the market continues to push higher. What's interesting, I guess, is that it has been propelled higher by the banks, financials, and to some extent industrials, the likes of Wesfarmers. But the resources, the big iron ore miners, and I noted one broker today has just downgraded their iron ore forecast. The big iron ore miners really struggling. China really struggling to come out of their sort of post-COVID funk at the moment. And it may be that if the Fed cuts, the Chinese PBOC can cut as well and help things along. But at the moment, it's all about banks, it's all about industrials, to an extent tech stocks as well here, although we don't have many. But resources, apart from the gold sector, which we're seeing record highs in gold, has really been passed by at the moment.
Signs of the markets changing times. Henry Jennings, thanks very much for taking us through it this morning. Catch up soon.
My pleasure. Thanks, Bridget.